Alright, guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So, today is another lazy day, a lazy Sunday for me. But anyway, I'm going to do some a review on two of my winning trades last week. I'm going to explain why, and how I enter the trade using the most common supply and demand method, and of course multi time frame analysis, right? So first of all, the first trade was over here. All right. uh I do not know how should I put it into words. I'm quite proud of this trade because uh the the risk reward was quite huge, and then of course I didn't take all the way, but anyway, I'm still very proud of it. So what happened was that I saw the price break this structure. As you can see, uh, the price came up, right, making a high, low, high, and then drops, right, drops, and coming back, and then drops again. So at this point, all right, at this point, there are two possible entry for me, right? So the first obvious is over here, right here, right here, right? So the second possible entry will be over here, right? So this will be my entry point. All right, this will be my entry point. So what I'll do, I will do is that I'll switch into different time frame. All right. So of course I'll switch to higher time frame and see is there any possible. Both is also possible entry. Look at it. Both is also possible entry. All right. So what I'll do usually is that if this is the case, I will do two pending order. All right, I'll do two pending order. One is over here and the other one is over here. I will diversify my risk, right? I will diversify my risk because at this moment, even sometimes I do not know. All right, I do not know which is the correct trade to go in. But if this is the case, I will diversify my entry. So what I mean by that is that let's assume that I'm willing to raise $100. All right, so I'll put $50 over here, $50 over here. I just want to catch something. So if I lost, I'll lost 100. That's all. All right. If not, I'm gonna take a lot. So what happened was that I switched into different time frame, as you can see, and found that both is also possible. Both of these trades are possible because this is drop base drop, drop base drop, and there's engulfing supply zone, or should I say fresh supply zone. All right. So I took my risk. I placed my order, right, and then eventually the price came back, uh, trigger, and then goes down. So for this trade, once it was triggered, because I have my alarm on, I took my profit over here only. I just took my profit over here, not a lot. I just took my profit over. Reason is that because one of it is because this is a fresh zone for me, right? This is a danger zone for me, fresh. All right. If you do not know, you might look back at some of my videos. So second is that this is a very powerful bullish engulfing pattern. Can you see that? This is a very powerful bullish engulfing pattern. So I do not want to take my risk, right? I can place it over, but I mean I can place it below here, but no, I just place my take profit over here. So eventually the price came down in within an hour, and got, take me out in a positive way. I didn't go so low because of my spread. I add in my spread somewhere around a bit more. So I had 1 to 16, I think 16, not 17, 1 to 16 risk reward ratio for a single trade, right? So my account not blow in a negative way, right? Anyway, you get what I mean. So this is how I get the first trade on the using my multiple time frame analysis, and also what should I say, the supply and demand. All right, it's a basic supply and demand. So it happens the other then it happens the other day. Then what happened was that, let me get it out. On the next day, I saw the price came back up. All right, came back up, and then eventually, if you look at it properly, it's forming high low, high high, and then drops beyond the low. All right, it broke the structure. So eventually, I've told you before that the price will likely come back, retest, and then goes down. So what I did was that I identified the fresh zone along this line, and there is only one fresh zone over here. All right, this is the fresh zone over here. Okay, so what I did is that uh because I anticipate the movement will be very very how should I say, very short, because usually after a big movement there won't be a lot of movement, there won't be a large movement, it will be very short and very slow. So what I did is that 30 minutes I straight away go to 5 minutes to sniper my entry. That's how I always do. First of all, I already identified my zone, right? So of course you can switch to the higher time frame to verify. Yes, all right, you can verify, see is there anything. Yes, there is a supply zone, there is a supply zone. So I'll go to 5 minutes. All right, so what's interesting here is that inside my box there is only one fresh zone. All right, inside this box, if you can see, my method is that usually I don't move my box. Yeah, there is a few more zone below or beyond my box. That is not how I trade. Okay, I always stick to my rule. Inside my box, I always look for entry inside my box only. All right, so inside my box, as you can see, 5 minutes, there is only one possible entry, no other. If you cannot identify it by now, you might watch back some of my videos. I'm gonna already explain a lot of time. So this is the entry over here. All right, this is entry over here. Not only that, if you look at it properly, some of you might can identify it. This is a QM continuation structure. So in a small way, the price making a high low, high low, then dive down. Right, dive down. So that is only one possible structure over here. There's no other structure you can go for your entry, and the stop loss was very small, which I don't like because of my spread. Right, so what happened was that I already identified my entry. The price just came up, touched my entry, and then went down. So where do I take my profit? Where do I take my profit? I took my profit at 8 7 sorry, I think 6 8 something. I remember the figure. All right, yeah, same thing, same story. Can you see this bullish engulfing structure over here? Right, so this is a danger zone for me. This is a danger zone for me. If you can see that my entry over here and my entry over here, and how I take my profit over here and how I take my profit over here, is it the same? Yes, it's identical. All right, I entry with multiple time frame analysis, and then I take my profit when there is a very strong danger zone. All right, so this is my strong danger zone. This is a of course it's not crash, but still considered very dangerous because I anticipated it's a short movement. It's a rally based rally, right? And that is a bullish engulfing. So I took my profit over here. Like I said, I told you 176 something. So it's a simple trade for me. Very, very simple. One to 10, not so much. I believe it's around 1 to 9 something only. The risk reward ratio. All right, so 1 to 16, 1 to 9. That is my two winning trade for last week. Quite proud of it because when I saw it, I don't trade full time. How should I say? I don't stick to my computer, my laptops, my phone. What I usually do is that either early in the morning or late before I I'll look at some possible entry, and then I'll put a lot of alarm. Example like this, it's almost going to my zone. Usually I put some alarm, right? Alert, right? Alert. So once it trigger my alert, my phone will give me a notification. I'll just look at the phone and then place my entry. That's how I usually trade. And once I place my entry, I know that the price will be reacting. I already see possible exit, right? Possible exit area. Okay. So the other question is that some of you might ask, why, example like this trade, why don't I place my take profit over here instead of here? Reason is that if you look at this area, it's already tested. This movement already tested, so means that there is no more fresh zone over here except for this one. All right. Instead, in case you guys wonder why I take my profit over here, right? That is not fresh because it's already reacted, and then the price, once the price drop, you drop all the way. That's it. And why I do it this way is the other reason is that I want to eliminate my emotion. Right. Sometimes it might goes further down, then I don't care. I really don't care because if I'm trading gold, if you look at gold, I'm talking a lot, but anyway, it's okay. If you look at gold movement, actually, every week there are 2 to 3 days, either 2 to 3 days, it will move around 150 to unlimited. Really, really, it will definitely move 150 to unlimited. If you look at this candle over here, just a single candle, how many pips already? Let's go from here, 40 to 40, 160 pips. You see? So in gold, usually they have a lot of a big movement, like this big movement, pop, 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 2 days in a day. All right. So one movement up, one movement down. That's all. End of the week will be very slow. So take note on that. Hopefully you guys get pick up a few tips or tricks about trading QML, supply and demand, advanced method. Uh, the method, or should I say the way I show things, might be quite easy, or I might simplify it, but I just want it to be simple. I don't want things to be too complicated, right? And by the way, this area that I highlighted before, this area, take note, take note. Uh, it looks like there are possible. I mean, in future, the price might bounce back to this area. But anyway, just put a look for now. I'll look at the how's the price action before I place my entry. So remember that you have to look at your price action before you place your entry. This is quite strong, this area. You can see at the back there is a lot of resistance. There will be a lot of resistance along this line. So this might be a very strong area, but don't place any entry point over here first. Look at how the price action. If it's going very fast, like a 2-3 candle all the way up, then don't trade. If it's going slow, or going spike up and then suddenly slowly going up using the tree drive, this is a good entry for a very strong down downtrend. You wanna catch big fish over there. All right, so these are the tips for today. If you guys like the videos that I make for you guys, please give me a like and do subscribe. Of course, I do always take note of your comment. If the musics are too loud, I might tune it down a bit. One of the reasons is that I purposely put some music on the background is so that it does not sound too boring. Right? Actually, it's from experience. I watched, even myself. Before this, I watched a lot of trading videos on YouTube. But if without music, it sounds very plain and very boring. So with some music, at least you got something. I mean, the kick inside your brain. All right, and you can hopefully you can learn more. All right, that's all for today. It's long-winded. That's all.